He'd prefer we didn't all watch him, wouldn't he? Okay, so my cash account got a little bit crowded, so I should have written smaller or something like that. We always have more entries into the cash T than we do any of the others, so you might want to remember that, just kind of write a little bit smaller on the cash. We ended up with 8,700 in total debits in cash, 7,000 in total credits in cash. So we take the difference between the two, and the largest size wins. So we end up with a $1,700 debit balance in cash. All the rest of them, pretty much, except for dance lesson revenue down here, it had 3 entries in it. So we just draw a line, added up, that's 3,000. Any questions about that? And then the second page, mine may look a little bit different because I put in some extra accounts that you didn't need and I took them out. But since there's only one number in those, I didn't draw a line and add them up because they just are what they are. Okay? Any questions? All right, so your trial balance is done next. And it should look like this. And yours should look exactly like mine here. Maybe if I can get it all on here. Okay, so we're just listing all of our accounts and adding them up. So what we do is just start at the very first T account. It's cash. It has a $1,700 debit in it. That is really hard to read it. Let's see if I can focus a little bit. Better, is it? Anyway, so we write down cash, 1,700, and we put that in the debit column. The next account in our T's is accounts receivable. It has a $300 debit, so we write that down, and we just go all the way down. The first credit we run into is notes payable, so we need to put that over here on the right. Okay, and then when we get through listing all of our accounts and how much is in them, we just add up at the bottom. We should get 159 on both sides. That tells us we're safe to go ahead into our financial statements because the debits and the credits match. Yes. Problem 1, the dance studio. That was your first homework thing, was finish this problem. All right, from this then we can do the financial statement. So the first one we always do is the income statement. So we need our heading first, name of the company, name of the statement. The income statement is always done for a period of time, in this case, the whole year. And so the next step is revenue. We had 2 kinds, and the dance lesson revenue was our primary. So we list those 2 and then total them on the right. Okay. With expenses, we have all of this list, and they're just listed here in the order you found them in the T accounts, which meant the same order as the trial balance, and the same order here. Total expenses, take total revenue minus expenses, net income. Any questions? Everybody has this perfect? Any communication would be helpful. Everybody's got it perfect. All right, I'm expecting perfect scores on this quiz then. I did give you the solution on this already, did I? Oh, okay. All right, the statement of retained earnings for this one is very, very brief because we don't have a beginning balance, it's 0, because it's a brand new company. We do have net income, which we found on the income statement, it was 200. Okay, and so we didn't have any dividends this time either, so we can't subtract those. So it just is that the ending balance of retained earnings is the same thing as net income. How many times will that happen in the life of a company? Just once, because just once we start with 0. Next year, the beginning balance of retained earnings will be how much? For this company? 200, right, because this ending balance will roll over and it will become next year's beginning balance. All right, the balance sheet, a little bit longer. Notice that the date line is different on the balance sheet. It does not say for the year ended or the period ended. It just says on December 31st, these were our assets, liabilities, and equities. Okay? So we have assets first, then current assets, and they must be in this order: cash, accounts receivable, prepaid insurance. Add them up to get total current assets. The next heading, and the only other one we have, is property, plant, and equipment. These should be listed the way they were in your T accounts and the way they were on your trial balance. So we have land, building, furniture, fixtures, and equipment. Total PPE goes on the right. And then add up the two subtotals from assets to get total assets. Any questions? All right, we have two sections left. The liability section, extremely brief. I did not do any kind of titles or totals because there's only one liability in the whole company. Now, this will never happen for a real company, but for us, we only have one item, so I just went ahead and put it in the total column. If you put a title on there, if you put total liabilities, that's fine. It's not wrong. And then under stockholders' equity, you have two. Capital stock must go first. And then remember, always to pull the retained earnings from the statement of retained earnings, not from your problem. Okay. Total equity, add that to total liabilities to get total liabilities and equities, which should match with your total assets up here. Yes. On this? On the statement of retained earnings? No, if you have a beginning balance of retained earnings, you put it there. Well, you start with zero as your beginning balance, yes. But we could have had dividends this first year. That would be highly unusual to pay dividends in the very first year of a company because normally you have to kind of get started and become profitable before you start paying your investors. But it could happen. All right, other questions? All right, now, I was having a real hard time remembering. My notes say that we did not finish problem 2. Is that correct? In class? Okay, let's go there. Let's just keep working through. And this will be very specific practice for the quiz because the quiz is 80% journal entries. Who can tell me how many questions that is then? See if you're really on the ball this morning. Do what? How many do we usually have on a quiz? 10 questions. 10 questions, so that means 8 of them are going to be journal entries. All right, let's see. We did through that one. Is that correct in class? Through October 3rd? Oh, we did the 4th too? Okay. All right, so on the 5th, the corporation bought $75 of office supplies and charged to its account at Staples. Kirsten, today is the day I begin to call on you. I've been going so fast I hadn't had a chance, but we'll start with Kirsten today. What did you put for that?
I put office supplies, and then I put the 75 with credit. And then I put accounts payable and 75 with credit.
Excellent. Okay, debit office supplies, credit accounts payable for $75. If you want to ask a question, just stop me. Otherwise, I'm just going to kind of roll through these. You should be correcting your work if you find an error in something you've done, so that when you start studying for your test, which incidentally is a week from today, your first major test, 1 week from today. Yes?
Okay, so when it says charge to account, does that normally mean accounts payable?
Yes, it does.
Okay.
Unless it says we charge to our account, and then well, no, that's still going to be accounts payable. If we say a customer charged to his or her account, it's going to be accounts receivable for us.
Okay.
But it'll be one or the other if it says account. It's going to be accounts receivable or accounts payable. It depends on whether we're the one paying or we're the one receiving. Okay. All right, also on the 5th, the corporation bought advertising space in Accounting Magazine. Andrew, what'd you put for that?
Advertising expense. as the debit and cash as the credit.
All right, good for you. Debit advertising expense, credit cash. I so wish that was clearer for y'all. All right, on the 15th, 3 employees were paid a total of $1,200 for the first 2 weeks in October. Jack, what'd you put for that one?
Said we debited wages expense, credited cash.
Okay, I put salaries and wages because we don't know if these employees are paid by the month or by the week, but that's what we need. We need an expense and we need cash. All right, on the 16th, the corporation sent Shoeshine Company a bill for $425 for accounting services provided. Malcolm? I'm sorry, what? No, in this case, see, we've already done the work. It says we provided the services. We're sending them a bill so that they will pay us. So we have earned the revenue, so that means we do need to record it. So what do you think we're going to record? Yes, very good. So we're going to debit accounts receivable and credit. Jeff, what do you think we're going to credit?
Service revenue.
Some kind. Okay, we are an accounting firm in this case, so I called it accounting revenue. Okay, if you put service revenue, I would have called that correct. But remember that we try to get as detailed as we can if we know what's going on. All right, on the 20th, Dylan, the corporation received and paid a bill for utilities. What did you do there?
Utilities expense, debit and cash.
Okay.
Credit.
Debit utilities expense, credit cash. Please remember your debits have to go first, and then your credits are on the next line and indented. All right, the 25th, the corporation received a check from Shoeshine Company in payment of its account. So we kind of have to think back to this one. When we sent them the bill, we debited accounts receivable. What are we going to do now, Kendall?
I did
You did that entry? Okay. Well, in the first one, it says we sent them the bill. And this one, it says we received their payment.
Yeah, well, I was thinking that when you sent them the bill, like you didn't get paid for it.
Right.
We got it, that's what I put.
So what did you put here? Okay, but today we got cash, right? They paid us. Yeah, so it doesn't really work that way. So what we need to do is go back up here, folks. When we sent them a bill, we put on our records that they owed us this $425. So we debited accounts receivable. Today they paid it. So we have to debit cash and credit accounts receivable. When we debit accounts receivable an asset, it increases it. Today we're crediting it, and that will decrease it back down because now it's paid. Yeah. Yes, debit cash, credit accounts receivable. Remember that little question series that I asked, that I told you might do if you're not real sure? Ask what did we get and what did we give? Well, when you ask yourself what did we get, you have to hear cash. They sent us cash, right? So that will help us to know we've got to debit cash. And then because we already recorded the account receivable, now they paid it, so we can't keep the receivable saying you owe us and keep their money. You can't have both. So we have to take away the receivable now that they paid. Let's see. On the 31st, 3 employees were paid a total of $1,500. Sydney?
I said salary expense.
Okay. Yeah, it'll be the same as this one. It's just this one was at the 15-day mark. This one is at the end of the month. They get their second check. Okay. And I put salaries and wages because we don't know if these employees are salaried workers or wage workers. Any questions? Yes.
So do you always have to put salaries and wages?
Yes, because then you cover everything. If it said hourly employees are paid, then you know that's wage expense. If it says, for example, in the dance studio, remember we said we hired those teachers at $1,000 a month? That's salary. So that's salary expense. Okay, but salaries and wages covers both. Does that make sense? Okay. Other questions before we leave this one? Okay. Let's do problem 3 then. We have not done that one before at all, I don't believe. But you had it for homework. It was on your list anyway, whether you actually did it or not. I won't know because I didn't ask for you to turn this one in. But anyway, hopefully you did. In this one, we are a store. So this is the first one we've done where we weren't a service business. So this is another business. If I didn't tell you before, we often do brand new businesses because they're the easiest. So here we go. The owner invests $15,000 to start Gadget Gourmet, which is a corporation. Sims, what'd you do with that one?
Owner invests profit. Would be the credit and cash. Okay.
Yes. Okay. Put the debit first, though. You're going to debit cash, credit capital stock. Debit cash, credit capital stock. On the 4th, the corporation borrows $150,000 from the local bank. Luke, what'd you do with that one? Notes payable. Yes. Okay. Whenever we borrow from the bank, they do require us to sign a document called a promissory note, and that's why we call it notes payable. Payable is a word that says we owe this, we have to pay it back. Okay. On the 5th, the corporation purchases a building for $140,000 cash. The land is valued at $50,000. Dana? Okay, we got a little bit more than that going on. That's right. But we also know about the land value. So what are we going to do about that? Hagen?
Put the land for debit and the building for debit and then add them up.
Okay. We're working our way toward, but there's still an error. Johnny, what's the error in that one? What did Kagan just say that wasn't correct? Yes, we have cash, but for how much? Y'all work together? Tyler? It's okay.
Do like a separate transaction.
Nope. Luke, help him out.
But would you not include the 50,000 in the cash?
Yes. We cannot use 190,000 because look, we only paid 140. Where did we get the extra 50,000? So cash only went down 140. Okay. It's just in the way we talk about things. It's kind of the language. For example, if you were buying a house, you make an offer on the house for a certain amount, but you are getting the land, the lot the house is sitting on also, right? So it's the same thing here. We paid 150, is that right? No, 140. We paid 140 for the building, but we got the land too. It's just that for accounting purposes, we're going to break out the land value from the building value. So we do have a compound entry. So most of what everybody said was correct. We're just working our way toward it. But we're going to have 140,000 is what we paid. So cash goes down 140. We know that. But for that 140, we got two assets, the land and the building. And we know that the land appraised at 50. So that means the building must have been worth 90. Otherwise, we wouldn't have been willing to pay 140. Yes, John.
So when we do it, like, if we were to do a trial balance on this, how would we?
Well, we're equal. Okay, the building is 90, the land is 50, the cash is 140. So it does balance. Debits equal credits.
Wait, say that again?
The land is 90. This is just aggravating me tremendously. Is that better or worse? I think this thing was probably made more for photographs or something because it does not like numbers. Okay, but let me try to point. All right, the building is 90 here. And how did we get that? We paid 140. And we're told the land value was 50. So we just subtracted. That means the building must have been worth 90. So 90 for the building, 50 for the land, and our cash went down 140 as a credit. So this is a compound, what we call a compound entry, as more than one debit or credit. Everybody okay? Let's see. On the 6th of February, the corporation rents a billboard for $5,000 a year cash. Kylie, what'd you do with that one? Okay, we'll take the cash on credit, but let's think about this. You know what a billboard is, like beside the road? Okay. Yeah, that's not a utility. Utilities like electricity, natural gas, things that you're paying to keep your lights on and stuff like that. Okay, so what do you think a billboard would be? Okay, well, but we didn't buy it. We don't own it. We just paid to have our ad put on it. Advertising. There we go. Okay, now, we know it's advertising, but hold up. We still don't know. We have two choices on advertising. Prepaid advertising or advertising expense. Which one do you think we're dealing with here? Madison? Prepaid. Why do you think that? Yeah, we paid up for a whole year. Okay? So in this case, we've got prepaid advertising as our debit and cash as our credit. You can't hardly read that at all. Just not good. Is that a little better? I can just keep it there. Okay. Also on the 6th, let's see. I don't have a name tag out there. Alex. Okay. The corporation buys a computer for $300 from Best Buy and paid cash. What'd you do? Okay, something like that. It's got to be an asset account. And usually I use office equipment, if that's what it is, to sort of differentiate from what could be earth moving equipment or a backhoe, you know, whatever. That's also equipment. So I usually differentiate office equipment. If you put computer here, I would have counted that correct also. It's got to be an asset, though. No expense word. Don't put an expense word on it. All right, on the 7th, the corporation buys a security system for $1,000 on account. Let's go back to you, Malcolm. Okay, if we buy a security system, are we going to charge that to an expense account or are we going to put it in an asset account? Yeah, because we got a security system that we'll be using in the future, right? And so that means it's a future benefit to us, so it's an asset. All right, so we need an asset. And then what else do we need? So what did we get? We got the security system, which we've established as an asset. What did we give Did we? It says we charged on our account. Okay, so we didn't give cash. So what is that? Accounts payable. Very good. All right. So we have some asset account. I just called it what it was. Yes. Well, because this security system is going to provide future benefit. We only put in an expense if we're going to use it up immediately, and we're not. Hopefully, this security system will last us years, right? So it's an asset. And on account means we did not pay cash. We charged, so we have an account payable that we'll have to pay later. Did someone else have a question? All right, the corporation buys inventory worth $5,000 for cash. Jack?
Debit inventory, credit card.
Okay, very good. Inventory, got to be called that. Do not put expense on the end of that. It's not an expense. We bought inventory that we put on the shelf. It's an asset. We'll sell it later, hopefully. Customer comes in and buys 5 egg beaters for $10 each on account. Andrew?
$50 account receivable, and then that's debit, and then I said for $50 on the credit.
Okay. First part is correct. We want a debit accounts receivable for 50. Okay. But think about it. We don't sell to the customer for what we paid for it. So when we buy the inventory, we debit inventory for what we paid for it. So we can't now credit inventory for what we're selling it for. That's a whole different price, right? So the account is going to be the revenue account called sales. This is the first time we've seen this, because remember, this is the first time we've had a retail environment. We've been doing service businesses, so every time we had revenue, it was accounting revenue, dance lesson revenue, registration revenue. Sales is the revenue account for merchandisers, for organizations that sell things for a living. So this is a revenue account. You might want to make yourself a little note. We don't say sales revenue. You don't have to, because sales is revenue. Okay? But that's a revenue account. In this particular chapter, we're not going to get into the inventory portion of it. We'll get into that in chapter 5. So yes, Andrew, at some point we would need to remove that item from inventory. But we're still on our baby steps, so we'll get there. All right, on the 20th, an outside investor invests $10,000 in the corporation. Kirsten, what'd you put for that?
Debit cash, 10,000, and then capital stock, 10,000 credit.
Good, good. So this is just like the entry we made when we started up a brand new company. It's just that this one's already operating and we take on a new investor. So the company gets cash and a new investor, so it's capital stock. All right, Sydney, a customer buys 10 kitchen widgets for $35 each for cash.
$306. So would that be inventory or equipment?
Neither.
Neither. We just, okay.
Sales,
Okay.
just like the other one. Okay, so what's the debit?
Sales.
No, debit is going to be for cash. It says customer buys 10 widgets for $35 cash. So again, what did we get? We got the cash. What did we give them? The widgets they bought. Okay. So what are we going to debit? Cash. Very good. And what are we going to credit? Sales, which is revenue. Good. All right, and we just multiplied 10 times $35 each. All right, on the 27th, the corporation pays 2 employees $250 each. Where are we, Kendall?
Do debit, time spent. Time spent 500, and then credit cash.
Okay, salaries and wages expense again, because we don't know if they're salaried or hourly. Probably they're working in a store, they're hourly, but we don't know for certain, okay? And 2 employees, $250 each is a total of $500. So make sure you get the $500. All right, on February the 28th, the corporation receives and pays its first utility bill. Dylan?
Utility expense, debit, cash, credit.
Okay, very good. Debit, utility expense, credit, cash. All right. It sounds like it's going pretty good, but obviously I can't see what's written on your paper, but I don't see a whole lot of people scribbling and erasing, and so that seems to be a good sign to me that we're doing well toward our quiz today. All right. I put the solution to problems 4 and 5 on Connect early this morning, so they are there. So let's go on and let's look at problem 8, which you haven't looked at. We're getting close. We probably got about 10 more minutes, so let's just keep practicing a little bit longer. Problem 8, you probably have not tried this one because it was not assigned in any way, but it's just journal entries again. And someone in the other class said, can you please give us some extra problems? I think there's 16 problems out there, and I've only assigned 1 through 5, so there's plenty of extra problems to practice. And if you want to come by the office, you can see the solutions to anything. So any problem you want to work that I didn't assign, work it. It's there for your practice, and then come by and let's check your answers. All right, problem 8. Bearden Incorporated, that tells us a lot. We still don't know what kind of company we are, do we? Had the following transactions for May. Bearden Incorporated signed a note from Coronado Bank borrowing $200,000. Thames, what did you do for that? Oh, you didn't do that, but let's do it.
No, payable. No, payable will be the cash will be paid.
Let's think about that. Okay, you have the accounts right, but the debits and credits wrong. Okay, we want notes payable to increase. It's a liability. To do that, we have to credit. Cash, we want to increase. It's an asset, so to do that is a debit. All right, so we're going to debit cash, credit notes payable. Okay, please ask if you're having trouble. Okay, Bearden Incorporated purchased a building for $120,000 cash. Luke?
So the building would be debited and
Okay, debit building, credit cash. Bearden Incorporated purchased $300,000 in inventory on credit. Dana? Yeah, very good. Debit inventory, credit accounts payable. Debit inventory, credit accounts payable. Bearden Incorporated made sales of $500,000 on account. Kagan?
Cash be debit and accounts payable credit.
Okay, let's think about this. What did we give and what did we get? Okay, so let's start with what did we get? We made a sale. What did we get? Did we get $500,000? It's on account, so we didn't get $500,000 cash. We got a promise that they'll pay us later. The customers will pay us later. So what do we call that? Accounts receivable. Very good. All right. And so why did they promise to pay us? because they purchased something from us, which we call a sale. It's a purchase for them, but for us, it's a sale, right? And so that's our revenue. All right, so we're going to debit accounts receivable and credit sales. Debit accounts receivable, credit sales. All right, Johnny, number 5. Bearden Incorporated paid dividends to stockholders in the amount of $3,000.
Dividends would go down.
We're paying fewer dividends than we had before?
No, it would go up and then.
Right, dividends is going up, and how do we do that? I think this may be our first dividend entry.
Debit.
Debit, good. Dividends are increased with debits. Remember the D's, that might be helpful. Dividends are increased with debits, okay, because they're a debt account. All right, and then what else happened? What are dividends? No. What are dividends? Just definition-wise, what are they? It's the company paying the investors a return. So what do we pay them in? Cash. Okay, so we're going to debit dividends to increase it, but our cash is going down. So credit to cash. All right, paid the employees for services performed. Tyler? Salaries and wages what? Expense. Has to be expense because there's also something called salaries and wages payable. We'll learn about it in chapter 4. But so you can't just say salaries and wages because that could be an expense or it could be a liability. We have to know which one. All right, good. Received $450,000 in cash from customers paying off their receivables. Kylie? Okay, that would mean our accounts receivable are getting bigger and our cash is getting smaller. Is that what you want to do? The opposite. Okay, so for the quiz, I'm thinking, because that's the second or third, backwards one. Maybe you need to go through the steps, at least mentally, and say, okay, what accounts are involved? Did they increase or decrease? How do I do that in debits and credits? So you might have to do that in your brain, even if you decide not to write it down. I'm going to encourage you to write it down, frankly, just to make sure. All right. Bearden Incorporated paid $100,000 on its accounts payable, Madison. Okay, you're making cash get bigger and accounts payable get bigger if you do that. Y'all are starting to worry me now. Okay. Think about what's happening, and cash is the easiest one. So if you know there's cash involved, think about it. Did my cash get bigger or smaller? How do I do that, debit or credit? And then do the opposite for the other one. All right, and then the last one, paid taxes in cash. Go ahead, Alex. Cash and an expense. Okay, so which one's the debit? So cash is getting bigger. Okay, tax expense, debit, cash, credit. Yep, it's getting about that time, isn't it? Yeah, those, I think I still may have them if I can get switched over. Let's see. Right up there. Okay, ask what accounts are involved. Ask how they changed. Did they increase or decrease? Recall the debit or credit rules. Which one is the debit, which one is the credit? And then write it down correctly. And then the next 4 bullets are how do you write it down correctly? You put the date on the first line, the account to be debited on that first line, and the debited amount in the debit or left column. Come down to the next line, move over with an indent, write the account to be credited, and then put the amount to be credited in the credit column, which is the one on the right. All right, any other questions before we take the quiz? Which, of course, you know, I have to go in and open it right quick. All right, what I would encourage you to do is get one blank piece of paper in front of you, because, you know, this is short answer, so you're just going to be clicking what to debit and credit, and it might be helpful to kind of write it out, since that's how you've been doing your homework, and then pick the right answer as opposed to just trying to do it all in your head. All right, has everybody got their Connect open? Don't open quizzes folder yet, because I have to show it before you can see it. Matt, can you see I'm opening the quiz now?
Not yet.
Okay, it's open. So y'all can start whenever. Like I said, I'm going to collect your piece of paper, so put your name on it, and any thought that you go through and getting the answers I want to see. No, you can't put that on your paper. That's blank piece of paper. Blank piece of paper.
I just put that on
Oh, I'm sorry. You just put that on there. Say, how do I know y'all just put it on there? You might already have it on there. What? The debit credit rule. It should be in your head. I just meant the paper might be helpful to step you through. Okay, I know what accounts are in there. I know.
Exactly, but I imagine it's about to cut you off, so still working.